Hey guys, welcome back to the channel. This is Sharil and you're watching What is Millennial, where we talk about all things money that they don't teach you in school. And in this video, we will be discussing what has been happening throughout the month of September in the world of finance. We will talk about how the world of finance has been doing for the month of September, how the economy has been doing, what new things happened in the month of September that will affect the course of the economy for the rest of the year. We will discuss how the stock market has been doing so far. We'll discuss how the cryptocurrency market has been doing so far. And I know we still have like a day or so left over for the month of September, but I think the past 29 days have been a good indicator of how the market has been faring and what's going to happen for the rest of the year. That being said, I'm not a financial advisor, so these are all my opinions about the market, and these are all things I am doing for my financial journey. So if you find value in this video, great. But I would definitely consider doing your own research before investing or before taking advice from the video, and talk to your financial advisor before making your investment decisions. So yeah, and if you remember in the beginning of this month, we talked about we started the month off with my investing strategy for the month of September, and I talked about of various ways how I would consider investing my money for the month of September, and I talked about automated investments through my work 401k. I talked about investments in brokerage account through my wife and I's joint Fidelity account. I talked about investment in cryptocurrency through Blockfi account, and I talked about my Play account, which is my Robinhood account, that I just randomly invest money in as and when money is available. And if I find value in certain stocks that I think will go to the moon at some point, I'll invest money in those based on my own discretion. So we'll talk about that. I'll link that video down below in the description. So if you want to check it out, if you want to see what strategy I use for the month of September for investing, feel free to check that out. And I'll try to do that video every month going forward, so you will be aware of how I am coming to certain investing decisions, and what sort of investing strategy I'm using to get rich at some point. Um, so we also discussed in that video that for the month of September, traditionally the stock market hasn't been the best performing investment class overall. So we have seen that on an average, the stock market falls about 0.5% for the month of September. And we definitely have seen some turbulence in the market over the past several days, specifically over the past couple of weeks. And with today being the second to last day of September, the stock market is definitely lower than where it started for the month of September. But later on in the video, we'll take a detailed look at what's been going on and what's causing this issue, and where the stock market could be headed from here. Uh, in the end, I will also provide a recap of what I purchased for the month of September, so that you guys are aware of that and we can track that together for future videos. And yeah, so let's get started with this investing journey, or the financial journey, I should say. So let's talk about the economy in general first of all, right? So what happened was, we saw in the beginning of September, towards the end of the first couple of weeks, new inflation data was released. So this inflation data was for year over year, so basically going from August 2020 to August 2021, and then month over month, meaning inflation just for the month of August, meaning going from July, the price is going from July 2020 to August 20, July 2021 to August 2021. Um, and we saw that the inflation for year over year came out to about 5.3%, meaning the prices for everything on an average increased by 5.3% going from August 2020 to August 2021. And then just for the month of July to August, the prices went up by about 0.3% on an average. So there were definitely a certain outliers that went up significantly. There were outliers that went down significantly, and on an average as a whole, this the 5.3% for the year and 0.3% for the month is what the data came out to be. Um, Inflation is still running pretty hot, even though we saw that for the month of August, 5.3% was lower than the general expectations of the market, which were right at about 5.4%. And then also inflation for the previous months, which came out to about 5.4 to 5.5%. So 5.3% was definitely lower. Also, 0.3% for just the month was lower than the market expectations of 0.4%, and lower than the monthly inflation um, for the previous months. So it seems like inflation is trying to correct itself and trying to get better. But there's a lot of factors that are playing a role in the inflation, in causing the inflation in the United States, and until those certain things are controlled, there's no way inflation's gonna settle down, and um, yeah, those things definitely need to be controlled. So we did another video earlier this month where we took a deep dive into the inflation data, and we saw some of the things that are actually causing inflation. Are one of the issues is the labor shortages that most companies are still facing. Southeast Asia, where most of Southeast Asia and China, where a lot of imported goods in the U.S. come from, they are still facing pandemic-related lockdowns, and they're still not able to produce to their 100% capacity, and that's one of the reasons why one of the reasons that's driving the inflation. Other issue is supply chain. Everything is, like we mentioned, being shut down. There is not enough supply of goods in the market. Um, Along with that, there's port congestions, meaning there's not enough people at the port that are able to sort through stuff and do all the necessary paperwork and get the stuff in the US in the market for selling in the right amount of time, and that's what's another factor is that's driving inflation. On top of these two things, I think the amount of money that the government has printed and circulated in supply in the market over the past year, that has provided most people with a lot more money than they used to have in the past to go out and spend that money. And because of that, there is a surplus of money with everybody right now, and people are aching to go out and spend money on things. And that's why there is a higher demand of goods than there used to be in 2019 or 2020, and that's another thing that's driving the prices up. So some of the things that we are seeing that are going up in prices are still the energy sector, gasoline being one of them, which just for the month of August went up by 2.8%, and it has been up in the double digits year over year. So that's a significant growth. I think some of it has to do with one supply chain, yeah, of course, but now that all the lockdowns and everything are opening up in the U.S. economy is opening up, people want to drive to restaurants or drive to work or drive to their vacations or do camping trips or whatever, and that's why people are buying more and more gas and using it, and that's what's driving up the demand and the prices. Um, we did see that the window coverings, which sort of like came out of nowhere, but we talked about this earlier on in the month. The window coverings went by 17%. So just for the month of August, the window coverings went up for 17% by 17%, and it was mostly driven by a lot of people buying new homes or existing homes for sale and moving from one place to another, and trying to make changes on the interior based on their liking, and just trying to grab whatever they can find for window coverings as soon as they can and as soon as they bought the house. So I know one of my friends bought a house last month, and he has been struggling to find these window coverings, and there's a long wait time for getting stuff as simple as the $15 blinds from Home Depot. So there's a lot of issues there with supply chain. There's a lot of issues there with demand in the market, and that's what's sort of driving the inflation right now. We did see that the airline prices or the travel industry as a whole sort of took a step back. So airline fares went down, rental car prices went down, and hotel prices went down, meaning that people are preferring more to travel by car or not travel at all, just because of the rise in cases from the Delta variant. And people just want to either stay at home or just use their car to go to places. And the novelty of travel that was present earlier this year, just because of being cooped up in their homes or apartments for the last year, I think that novelty is sort of fading now, and people are just going back to the normal amount of travel that they used to do 2 years ago, or even less than that, just because of um, fears from the other variant that's been spreading around. One of the other major factors that's causing inflation these days in the market is because of the Federal Reserve's monetary policies. I think keeping the interest rates down to pretty close to zero that the Fed has done since July last year now. That's one of the drivers that's causing this massive amount of inflation. Because of the low interest rate, like we discussed earlier, there is surplus of money in the market, right? But what's causing the surplus of money is the close to zero interest rates that the Fed has kept, which is putting a downward pressure on interest rates from all the banks in the United States, and it's making it cheaper to borrow money for a lot of people and businesses. So there is more borrowing of money, there is more spending of money, and because of the lower cost of borrowing the money, more people are able to borrow that money because of the cheaper option to keep and spend that money over time. And that's another factor that's driving this inflation here. Um, but I think if you take a look at the home prices in the United States, year over year, home prices have gone up more than 20% at this point, meaning that mortgages, the 30-year fixed mortgages, those are really cheap to own right now. And if you lock yourself in 2.5 to 3% interest rates, that's really cheap considered to the 3.5 to 4% interest rate that people were getting in the beginning of 2020 or end of 2019. So a lot of people are taking advantage of that interest rate and just locking themselves in with a relatively more expensive house, because when interest rates are low, you pay less money in interest every single month, which means that your affordability of house for month over month, for your affordability for mortgage every month, that goes up. So you are able to buy a slightly larger home than what you're planning on buying. So that's why people are spending more money on houses. It's bad to the point where people are paying way above asking prices even to just get into a home. I've read stories where for a 500 grand home, people are paying anywhere from 50 to 100,000 more than what the asking price of the home was, just because of the increase in affordability of homes given lower interest rates. So that's another factor that's sort of driving this higher inflation. So let's talk about these interest rates for a moment, right? So what has been happening is since July 2020, when the Federal Reserve first announced their stimulus package, they announced that they would start buying $1.2 billion in bonds every single month until the economy went on to get better. So in 2020, as everybody knows, everything was shut down and the economy was really being affected by the whole thing. So the Federal Reserve stepped in and started buying $1.2 billion worth of bonds so as to keep the interest rates low for the time being, and that would also inject more money into the market, um, which people are then able to borrow and then go out and spend, right? So since the federal funds rate has been so low, all of the borrowing has been relatively cheap and has given a massive boost to the economy. But just not just that, I think employment has also gotten better compared to last year, because last year I think almost 19 or 20 million people were unemployed when the pandemic first struck, and then now it's gotten better to the point where I think the number of unemployed people in the market is about 3 to 3.5 million. So it's gotten significantly better, I should say. So economy getting better, more supply of money, more people getting employed. These are all great things for the economy. So that's why everything's been going up. But at the same time now, earlier this month, the federal meeting happened, the FOMC meeting happened, and the Federal Reserve came out and said that at some point later this year they will start tapering buying these bonds. So it is expected that either November or December is when the Federal Reserve will start off slowly stop buying bonds month by month, and they're saying that the taper, which means that going from buying 1.2 billion all the way to $0, will probably take about 6 to 7 months. So mid of 2022 is when people are expecting that the Fed will complete their taper, and after that the interest rates are expected to go up. So in the beginning, when the pandemic first hit and interest rate was almost zeroed down, the Fed had come out and said that they will do whatever it takes for the economy to recover, and even if that means that they have to not raise interest rates until 2024, they would still find out ways to do that. Meaning, there was incentive for the market to go out and borrow more money and spend more money, because interest rates were going to be cheaper until 2024. Now, or even earlier this year, as the Fed saw the economy getting stronger and stronger, they changed their course and said that they would maintain 0% interest rates or close to 0% interest rates until 2023, which was kind of a bummer, but people were still okay with it. Now, earlier this month, when the meeting happened, the Fed came out and said the taper will end in mid 2022, and a lot of economists are now believing that the interest rates will start rising towards the end of 2022, which is putting a downward pressure on the bond prices, right? So because of the interest rates, expectations of the interest rates going up, the bond prices have started coming down, and the bond price, the 10-year bond yield started going up yesterday or over the past week. And because of the yield going up, that scared a lot of investors, and that's sort of why the market dropped yesterday. But we'll talk about that more in the coming segment here. But yeah, now let's talk about what the stock market and the crypto market have been doing for the month of September. Like we discussed earlier on in this video, or even in my investing strategy for September video, the stock market tends to uh, perform negatively for the month of September traditionally, and it has pretty much kept up, with its tradition for the past almost entire month. And it started out strong in the beginning of September, but then of course certain things happened over the past couple of weeks, and the stock market hasn't been doing so good. Um, and we'll just take a look at what exactly happened. So I think one of the major things that happened was the Evergrande crisis that suddenly came out of China. It just came out of the blue, and nobody was really expecting that. For those of you who don't know, Evergrande is one of the largest real estate developers in China. And earlier this month, right around the third week of September, they came out and said that they have borrowed too much money, and their real estate projects are not going as fast as they should have been going, just because of the labor shortages and everything for the past almost entire year. And because of that, they now owe more money than they have assets worth, because of all these incomplete real estate projects out there. And they were also bold to pre-sell their houses, pre-sell the houses they were building. So they took money from people wanting to purchase homes, and all of that money they put into the projects they wanted to work on. But all of these projects are moving so slow due to labor constraints that most of these projects are not complete at this time. So right now their liabilities are much more than their assets are, and all of their bonds that they owe interest on to banks or to institutions or to whoever, they are sort of unable to make those payments. So that event itself was considered similar to what Bear Stearns or what Lehman Brothers did passed in back in 2008, and that literally sent shockwaves through the world stock markets. Um, so, reacting to this event, when this news was first laid out, the stock market in the US dropped by about 2 to 2.5%. Dow Jones dropped by about 3%. But of course, it sort of presented a good buying opportunity for those who were sitting on a ton of cash and just were waiting for the market to pull back a little bit. And I know a lot of people dumped money in because the very next day the market sort of shook away that fear and went up by like a percent and a half almost. Um, but yeah, so there's other videos out on the internet on YouTube right now that explain the Evergrande crisis more in detail. I'll link a couple of those down below. Definitely go check it out if you want to understand more about the crisis. But let's talk about let's talk about what the crypto market is doing next. All right. So again, let's talk about what the crypto market is doing next. So, of course, since the stock market has been shaky, you would expect that the crypto market would fare okay. But of course, there's things that happen with Bitcoin and cryptocurrency in general as well that has been altering the course of all the cryptocurrencies going up, and now cryptocurrencies have started going down again. And again, China had a lot to do with what happened with cryptocurrencies. China came out earlier this month, just last week, and said that they were banning Bitcoin and transactions related to Bitcoin, and anybody holding Bitcoin. Again, of course, this is not the first time China has banned Bitcoin. We have probably seen China ban Bitcoin 8 to 9 times over the past 10 years at this point, and it's like, every time that news comes out that China is banning Bitcoin, it's like, okay, well, what else do you have, right? I mean, what's new? What's new anymore? So it has been so sort of grained into the market that if China bans Bitcoin, usually Bitcoin doesn't fall as much. Although there are certain people, certain institutions that sort of take that news as a fear in the market, and put downward pressure on the prices of Bitcoin. And typically, when Bitcoin falls, every other cryptocurrency that's out there in the market follows sort of the same trend and starts sort of going down, starts falling as well. So that's exactly what happened to Bitcoin. I think Bitcoin was hovering right around $45,000 last week, and when China announced that they were banning Bitcoin again, Bitcoin sort of tumbled down to about $41,000. Um, you know, take it for whatever it's worth. I think Bitcoin still is going to do great over the long run, just from my opinions. And yeah, I'm not too afraid of Bitcoin's price at the moment. But if you think about it, it was back in May this year that China came out before this and said that they were banning Bitcoin or banning Bitcoin mining in China itself, and they started cracking down on all the mining operations that were going on in the country. And because of that, Bitcoin had fallen from about $60,000 to $29,000 in a matter of a few days. And that was mainly because of the hash rate of Bitcoin going down, because not a lot of people were mining Bitcoin anymore because of this crackdown. And all these miners started looking for new safe havens where they could go out and live and start mining Bitcoin. So the good thing that came out of this was, um, you know, China, of course, the cost of electricity and cost of living in China is relatively lower compared to the US. So when you mine Bitcoin in China, even though it takes the same amount of energy to mine the Bitcoin, the cost associated with it is lower just because of the unit prices associated with those resources. But because of China's crackdown on this mining, all the miners are now looking for alternative places where they could go out and do the Bitcoin mining. And one of the places that the miners are looking at is Texas in the United States. And I've also read recently that Ohio is another potential candidate for where mining farms could be set up. So if that happens, the cost of electricity and cost of running operations and all those things is more expensive in China. I'm sorry, more expensive in the United States. Meaning that if it were to happen ever that Bitcoin were to start mining or people were to start mining Bitcoin in the US, the cost of mining would go up, meaning the rewards associated with mining Bitcoins would go up. And I think that would push the price of Bitcoin even higher. So that's what's going on with Bitcoin and cryptocurrency in general right now. But yeah, I mean, I want to end this video by talking about where I have invested my money in for the month of September, and leave you with my strategy for why I made decisions about this sort of investing. And then I'll see you again in October when we'll first talk about October investing strategy. All right. So let's take a look at where I invested money real quick for the month of September. So, just to recap, in the beginning of the month, I said there's a few investing strategies that I use. The first of them being my 401k, which basically gets pre-tax money out of my paycheck, and that's automatically invested into a fund called VFIAX, which is a S&P 500 tracking index fund from Vanguard. So that just automatically gets invested there. So that probably happened 3 times this month, since there were um, since this month had 1 week more than a typical month. After that, we have my wife and I. We have a joint brokerage account. We save a little bit of cash in there just for when the market dips, typically. And this month presented several buying opportunities. So between the 10th of September and the 20th of September, when the China Evergrande Crisis news came out, we were buying at every single dip, and we probably bought about $5,000 worth of FXAIX over the past 15-20 days in our brokerage account. Apart from that, my Robinhood Play account that I just use as a metric to, one, try and beat the S&P 500 every single year. Two, try and get rich quick, meaning if one of the stocks that I own in my Robinhood account, which is my Play account, if that grows exponentially, that will quickly make me rich, and I won't have to settle down for 8 to 10% returns from the S&P 500 that typically happen on an average every single year. Um, so in my Robinhood account, at some point I'll share my Robinhood account and show you what all stocks I have and what all investments I have. But for the month of September, I started buying. I started creating a position in Nvidia, which is a chip manufacturer. Chip manufacturer, a graphics card manufacturer. all those computer related things. Um, but I sort of created that position on margin in Robinhood because the market dipped when this China Evergrande crisis came to light, and I urgently needed a couple grand to buy Nvidia. So I just took took the couple grand in margin from Robinhood and invested all of that money in Nvidia. So one of my reasons why I invested in Nvidia is, of course, all of their computer graphics side, but they also do Bitcoin mining rigs, which is potentially can be a great business for the company over the coming years, specifically after Bitcoin mining gets relocated to the United States or relocated outside of China, to other higher cost of manufacturing or higher cost of mining countries or locations. And I think that's when Nvidia will really start profiting. The other reason I think Nvidia will be a great company is because they make chips for automakers. Right now, there's a major issue with chip shortage in the automotive industry that's shutting down the automotive plants left and right. There's a shortage of cars in the market. Used car prices have gone up 30% because people just cannot find cars to buy because of this shortage. So I think at some point, all of this chip manufacturing will be relocated from overseas to United States, and I think Nvidia will have a major contribution to making these chips in the United States at some point. So it's a long term play. We'll see how Nvidia plays out for me in a year or 2 years from now, and make decisions to if I should hold Nvidia or sell Nvidia and make money out of it, or even sell Nvidia at a loss. Who knows at this point? Um, so that's another stock I bought for the month of September. Apart from that, I started building positions in Cardano on my Coinbase account. Cardano is a cryptocurrency. I'm not exactly certain about what that cryptocurrency is at this point, but based on all the hype I have seen for Cardano on the internet over the past month, I started buying Cardano. But I think I got in at a pretty decent price. I think my average price was like $2.20 or something. So I think it's a decent place to be. I'm not too concerned about it. I'm not throwing in too much money at it. So if I lose that money, it's I'll be sad, but it's whatever. Um, but yeah, that's pretty much what I've been doing for the month of September. Let me know in the comments below if you specifically want to know about certain things that I've invested in. Let me know in the comments below if you have any questions about the economy in general, or where the interest rates are headed, or what's been going on with inflation, or what I think about what inflation is going to be like for the next several months. But let's talk about that real quick, right? So I think hopefully, when the Fed start tapering their bond purchases, I think inflation will sort of be on the lower trajectory, or going down trajectory, just because the amount of money that's in the market, all the stimulus that's been going on in the market, that will sort of stop slowing down. And once that happens, I think people will have less money to spend. There will be less money to lend to businesses, and interest rates eventually will start picking back up. So all of these will cause downward pressure on inflation, because there won't be as much demand anymore as exists in the market right now. So all of these factors will sort of start driving inflation lower, starting, I want to say, starting December to maybe end of next year. We will see a downward pressure on inflation. So yeah, so that's what's been going on for the month of September. Hopefully you enjoyed this video. If you did, please like this video below. Please subscribe to my channel. Please follow me on Instagram and check out my other videos. And I'll see you back here next week with my October investing strategy. All right. Thanks so much.